We started positive, moved into negative territory, but cyclical's doing a little better. Banks doing well. Yields are up. Good for banks overall. That makes it a little tough for home builders. They're down today. That's direct relationship there. Energy strong despite what's going on with Apache. Industrials was positive. Now it's flat. Utilities also slightly to the downside on the higher yields. The big story over the weekend, this was really late last night, was the China PMI numbers. Now remember, the global slowdown story has been very powerful this year. But look at this. Suddenly we were in positive territory. This is the official PMI, not the flash one. Consensus was 49.5 and 50. We haven't been above 50. That would be expansion since April in China. So this is all adding to the narrative that perhaps we're seeing some kind of bottoming in the global economy. We're seeing some data points that support this. This was very, very supportive of this narrative overall. If you take a look for December, it's a very positive. Going into December, the numbers have been positive. We all know this is the best month. It's up 1.6% since 1950. That's the average. That's Stock Traders Almanac. But look at this. 60% almost of the NYSE is above the 200-day moving average. Is that a little, a lot? No, that's very strong. Going into December, that's an excellent setup. And what that does is because you've got so many stocks, including small cap stocks, that have been strong recently, that's why the Russell 2000 is breaking out. 52-week high last week, not a historic high, but a 52-week high. That's because you're getting all of these stocks that are slowly moving up in the last month or so. Take a look at what the year-to-date, what we've been doing here. All 11 sectors, even energy is positive, maybe 2%. For the year. S&P stocks, 400 out of the S&P 500 are up going into the end of December. Last year at the end of December, only 174 were up. Of course, we had that horrible December, and everybody's concerned, oh, we may be having that again. And even those concerns are slowly going away because we see the differences now between December 2019 and December 2018 here. Just put that up and you'll see what's going on. Remember, in 2018, the Fed was tightening. Now the Fed is not tightening. It's at best neutral. We had a trade war that was getting more aggressive in 2018. Now let's call it, hard to characterize, let's call it an uneasy truce. And we had the global economy. We had people slashing earnings estimates like crazy going into 2019. It's still down a little bit going into 2020, but not nearly as bad. And now you see talk about bottoming and certainly no discussion at all about recession. We do have some companies that are sitting out there on the tax loss list. We all know we've had some big losses in retail last year. A lot of people are short retail stocks. There was a big article in the Journal about this. So there's Macy's that's down dramatically. We know Occidental Petroleum. A lot of the energy stocks have been weak, down 37%. 3M. These are stocks that you could mention maybe on the tax selling list that we've got. Barron's had a little story about that over the weekend, highlighting a couple of these names. But again, overall, the setup for December really couldn't be much better.